What I feel is the fact that there are certain things that are blocking foreign direct investments from coming into Nigeria. And we need to take a look at structural policy reforms to be able to ensure that we're deliberate and strategic, and more important, we're consistent.
You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition, we're looking at how to attract more foreign direct investment inflows into Nigeria, strategies for economic growth. My guest for this conversation is Mr. Tilewa Adebajo. He's an economist and the CEO of the CFG Advisory. Great to have this conversation with you, Mr. Adebajo.
Thank you.
Thank you for the time. Let's first begin with a recent insight from the United Nations Conference for Trade and Development, where it stated that there's a clear linkage between reforms and attracting foreign direct investment. When we look at the ongoing reforms by the current administration, from what happened in the downstream oil and gas sector, and of course the foreign exchange, has this created the necessary incentives to attract foreign direct investment in the country?
Well, first of all, when you talk about the link, if an economy is not properly structured and has a lot of impediments to foreign direct investments, then the foreign direct investments will not go there. So the question we need to ask ourselves in Nigeria is, first of all, is Nigeria a right place for foreign direct investment? Is our economy structured properly for foreign direct investments? If the question is yes, the question is, why is foreign direct investments not coming into Nigeria? Okay, is it because the Nigerian economy is not structured properly for foreign direct investments? Or are there certain things that are blocking foreign direct investments from coming into Nigeria? If we cannot answer that question, they're two separate questions, then we cannot make progress. So reforms, what does reforms mean? Reforms of what? Of your economy? Or so we need to understand exactly where we are going with these sort of things, because if you are not right, if your economy is not properly structured, then you will not attract foreign direct investments. So or your economy might be properly structured, but maybe you have certain policies or policy misalignments that are restricting foreign direct investments from coming to Nigeria. And I think in Nigeria's case, I think the potential of our economy is not in doubt. What I feel is the fact that there are certain things that are blocking foreign direct investments from coming into Nigeria. And we need to take a look at structural policy reforms to be able to ensure that we're deliberate and strategic, and more important, we're consistent.
Deliberate, strategic, and more importantly, consistent. And that takes me to the issue of policy you raised, because we're looking at something you raised in one of the pro-share economist conference, where you talked about the need for us to have a coherent investment policy that can galvanize or attract not just foreign direct, but local investments. And I want to take you to your experience, if you can expatiate on this, on your experience when you served as special advisor to the Minister of Industry, Trade and Investment. What was it like then that would spur those kind of FDI inflows that we can pick from in terms of having a coherent investment policy?
Well, at that point in time, we were deliberate. I mean, I was managing not only local direct investments, but also foreign direct investments. So you go on trade missions, but you also, first of all, drive the local direct investment. So there was a policy that any company that wanted to expand its existing facilities could benefit from pioneer status. So we signed MOUs with a lot of companies locally that drove the foreign direct investments. On the back of that, we were able to receive foreign direct investments. Two companies come into mind. Procter & Gamble, they came in with $300 million to build a FMCG factory in Agbara, and everything went okay. But now, because of the adverse policies, they've moved out, and I think maybe they're doing contract manufacturing there right now. But the environment has a situation whereby they've made a $300 million investments, they've left it. You have Carlyle Capital, which is a private equity company that came in also. They set up here and they put up an Africa fund, but they couldn't find transactions because their transaction sizes were quite high for this market. So I think they re-strategized and maybe sold the fund to the people who are managing it and they left. Again, another misalignment. On the positive side, the cement policy for backward integration was concluded at that point in time, and we did a study with UNIDO, and they found out that Nigeria not only could have capacity to produce cement locally and had capacity to export. So at that point in time, a policy that had started with the Third National Development Plan that was announced by Yakubu Gowon in 1975 was finally attained 40 years later with the ban on the importation of cement. And you can see that the cement industry today has grown. But right now, that industry needs more competition, more players, and government needs to take a look at the structure so that you can at least drive down the price of cement in Nigeria, because obviously the factors of production are quite high. So you don't create a monopoly or oligopoly situation in that industry. So we've been successful in that area. But another area where we've had challenges is, for instance, the automakers. The automakers told us very clearly, the big ones, Toyotas, Hyundai, and Kia, that basically they are not happy with our automotive policy, that they cannot invest in Nigeria in the automotive sector based upon automotive policy, that we need to enact an automobile act, that our automobile policy should be transmitted into an automobile act into our laws. When we know that that is the law of the country, then they know that we cannot change things. Because a policy, the next minister can come and change it after they have made investments. But when there's a law and they see that they are backed by the law, then things will be there. So that's why you can see that now, that most of what we have now is assembly plants. People are not coming in and bringing in major automotive plants. So that's another area whereby you have a situation in Nigeria. So the market in Nigeria is not in doubt, the capacity, but what the problem is that, Nigeria is a situation whereby, there's so many things that are policies that are not in alignment that is blocking the flow of foreign direct investments into Nigeria.
So if I get you very clearly, just like you used the Automotive Act as an example, we may need to review our investment policy in a way that it is legislated and backed up by the law in a way that any investor knows that, yes, there's clear guarantees and incentives in place. Okay. And let's look at the geopolitics. I know that earlier this year in our economist conference where you spoke, you talked about repositioning the economy in the whole geopolitical situation. And we've seen that there's some level of stability returning back with the peace deal signed between the US and Iran and Israel. How should Nigeria reposition itself at this time? Because global capital is the race that all countries are pushing for to attract the real significant investments.
Well, for me, I'm not really into all that issue. And, unfortunately, if you take a look at Saudi Arabia, UAE, Norway, and all these other countries, they were not affected by all these decrease in oil prices because they have created their sovereign wealth funds that provide that buffer for the fluctuation in oil prices. So a lot of all these people have already gone beyond the fact that an event will make an impact on this country. In this country, we had $25 billion in our excess crude account during the 2008-2009 global financial crisis. It was that buffer with the excess crude account that saved us from those crises because we had that buffer. Some governors, they told them, today, Sovereign Wealth Fund has maybe $100 million in the stabilization account. Excess crude is maybe not up to $100,000. So when you are governor, you are screaming one thing. When you became minister, you are now looking for funds to do your projects. You started printing money. And that is what has got the economy into the downturn we are today. So until we find a consistent way to create buffers for our economy, which is part of the stabilization that we're looking at on a long-term basis, until we create those buffers, then it's going to be very difficult for us to move ahead and to be able to attract those FDIs. Because every economy is, the economic situations globally and even locally is all counter-cyclical. When the boom is okay, then that's fine. When you're down, then that's it. So, these are the issues that you look at. So yes, stabilization has occurred. Reserves have hit 51 billion. If you take a look at everything on paper, everything ticks. But then there's a distortion. There's a key distortion between the real rates of return. Every economy is looking for a real rate of return, that beats inflation. But why should our inflation be 16% and our MPC base rates be 26.5%? Why is that 10% premium? Why can't we drop our interest rates to at least 20% or our base rates to at least 20%? To reduce that premium and create the necessary stimulus for growth. Because nobody can borrow at 32% to stimulate economic growth and productivity. We have good stabilization numbers, but we have low productivity. We have significant challenges with employment. And then in terms of how the economy will grow, those challenges are still there. It's a great time for the financial services industry. It's a great time for the pension fund industry. It's a good time for people who are investing and saving their money because they're getting good rates. But on the other hand, there's a trade-off as to whether you want to grow the economy and create productivity, because we've put another 140 million Nigerians into poverty and we don't have a middle class and we don't have consumer spending. So hopefully now that the oil prices are going down and these cost push inflation factors are reducing themselves, we might be able to get single digit inflation this year still. And maybe the central bank and the monetary policy committee of the central bank can now begin to look at how they're going to reduce interest rates.
Yeah. Speaking of productivity, which is what you and major economists and analysts have emphasized amidst all the things that we're seeing in the financial sector, what are those sectors? I know in your time, manufacturing, from what you said, Procter & Gamble, manufacturing was really getting traction. What are those critical sectors that we can attract this investment in, that will unlock growth, create jobs, and bring down this high poverty rates that we're grappling with?
You need to take a look at your trade policy. I've told you, these things don't work in isolation. There has to be synchronization. Trade policy, industrial policy, monetary policy, and fiscal policy. The biggest challenge today in Nigeria is fiscal policy. Government has a deficit of, I don't know, close to 35 trillion, with a budget they have that is completely unrealistic, unfundable. They've not been able to fund capital budgets in the last 3 years. But yes, they keep increasing the budgets and they keep increasing taxes. There's been an increase in tax collection from 44% from last year to this year. That's what the Revenue Service is projecting to increase, 44% increase in collection from last year. And yet, they still, the debt service as a percentage of revenue is now going up to close to 80%. It come down to about 50%, so it's now gone up to about 80%, hitting 85. So those are red flags. So when you have that kind of situation in place, then how do you look at your trade? So your biggest trading partner is China. So we're trading close to $25 billion a year with China in goods and services. So we need to start talking to the Chinese that, a lot of all these things you are importing from you guys, you need to try to see how you can set up here, which a lot of Chinese companies are beginning to set up in Nigeria. Even if they're not setting up, they're assembling cars, quite a few things. So that has started, but that's been done on the entrepreneurial side. People are taking advantage of certain points, but there has to be a deliberate strategy whereby there's a bilateral relationship with the Nigerian Trade and Investment Minister sitting with the Chinese counterparts, the Nigerian Finance Minister and the Chinese. There has to be a bilateral whereby there is a deliberate policy to identify certain things that needs to start being manufactured in Nigeria. So we reduce that 25 billion import bill from China and have that manufacturing done here. And once you do that, then you're able to create an industrial base. And they should be able to use this base not only to manufacture in Nigeria, but to export to the ECOWAS sub-region and to be able to use this as a base to export for the African continental free trade area. And in some cases, we should be able to develop an industry whereby we can take advantage of the AGOA tariffs that Donald Trump he hasn't canceled it, but that's still there. But Nigeria has not taken advantage of that. That is what Vietnam did. So a lot of the Chinese people went into Vietnam, invested there, and they were using Vietnamese quotas to export to the rest of the world and especially the United States. So we should do the same thing with China. It has to be a deliberate strategy. You have to sit down on a bilateral basis to sit down and discuss with them those sectors that we need to do. And then you have to make a long-term commitment. So that's what is very important. Then we need to start encouraging entrepreneurs. It's not just Dangote alone. We need to bring in more Nigerian entrepreneurs, just as we did in cement. With our cement backward integration policies, we created 2 billionaires. And so Nigeria now is self-sufficient in cement production because 80% of the raw materials are here in Nigeria. So why do you import? So we need to take advantage of those resources. So if you do not have your right policies in place, the local direct investment will not flow. And more importantly, foreign direct investment will also not come through. So that's why you have a lot of capital sitting on the portfolio side on the short end of the market.
So let's look at the horizon, the outlook for the remainder of the year into next year and beyond. Do you see some positives in terms of improvement? When you look at the MBS, the last capital importation report, it just showed that FDIs accounted for about 1.5% of the total inflows, which was very, very weak. Do you see an improvement uptick? And then you've, like other economists have talked about the need for us to unlock value from assets. Ministry of Finance Incorporated manages the assets, and this is advocacy for them to unlock value from public enterprises and our assets to attract more inflows. What could be delaying this, and what can be done to scale those activities?
Well, 2 questions first. Let us start with your outlook question. Yes. On the outlook as to how we see the economy going forward. Don't forget, we're going into an election cycle, so that creates a lot of uncertainty, and whoever is going to do anything at this point in time is going to wait. So what you see is the fact that you see the portfolio flows. You see that the more of the activity will be in the foreign portfolio flow. All the money that came in from FDI, 80% of that money went into the banking sector for the recapitalization. So you can't really count that per se, because it's not really going into the real sector. Like I've said, this thing is not going to happen. You don't think, if you don't start the work now, you cannot get the outcome later. There's no policy. I saw something about an industrial policy that was released. It's just a document. So the last thing that we need to do is we need to go back to the Third National Development Plan.
The one under General Gowon?
Gowon, 1975.
Why? Why should we go back to that?
Because that is the plan that got us to where we are today. Everything you have in Nigeria today is based on that plan. Everything you have in Nigeria that is working today is based on that plan. The plan at that point in time was, even the Dangote refinery concept is based upon that Third National Development Plan. We have 3 refineries we've built in Nigeria that are no longer working. But that is also the plan from the Third National Development Plan, because they realized that they needed not only an additional refineries, but we also needed an additional expansion that will also focus on exports. So all these were part of the Third National Development Plan. So we have even the cement plants, as I told you, was part of that, but it's taken us 40 years to implement some of that. And part of that plan was the fact that it looked at how do you encourage the indigenous side of things, because government cannot run business. So a lot of all these unlocking of assets you are talking about were state-owned enterprises that government set up to be able to try to run, to be able to create productivity and industrial growth. So we're saying that we now know that government does not have the capacity to run these assets. They should unlock them or try to find a way to do public sector, private sector partnerships, because it is clear that government has failed in running those enterprises. Ajaokuta was someone that we needed to do, because if you want to develop and you want to build your infrastructure, what do you need? You need cement and you need steel. So that was why we said, let us build these cement companies, which we have all over Nigeria today, and also to build Ajaokuta Steel. But we didn't succeed in building the steel plant. And we have a lot of iron ore in Nigeria. We're not even exporting it. So next, what are we doing? We're importing steel to create infrastructure. So steel is every house you see around here, everything has the steel. So you think about how much we're spending on steel importation in Nigeria. So if that is the way it's going to be, that we are no longer competitive on manufacturing steel, then let's look at the next level, value added. Maybe we should bring in steel ingots or whatever and get set up steel rolling mills here and bring in to add some sort of value on it. But so when you go back to that plan and you are deliberate about what you want to do, and you take a look at your largest trading partner, which is China, then you need to go and look at what you're importing from China and what China can begin to produce in Nigeria, and give them the incentives to come to Nigeria to set up that production. So you have another transformation in that area. So these are things you need to do deliberately. It's not by accident. You see, so it's really not by accident. You need to be deliberate. You need to be focused to be able to achieve that. If you don't do that, we're just going to continue along the way we are to the path of stabilization. So you have stabilization, but what about growth? The economy needs to be growing 8 to 10% per annum to be able to manage the population of the size of Nigeria. If it's not growing at that level, that's fine. That's why our GDP is maybe $300 billion if we're lucky. So, and comparative economies, their GDPs are over $1 trillion or so. So Nigeria is not a country, the potential of this economy is at least $2 to $3 trillion. But we are not able to run the economy and unlock the value to be able to get us to the 1 to 2 trillion mark. That has always been the challenge.
Thank you very much, Tilewa Adebajo, for bringing what we call the reset to how we should approach our economy and attract foreign direct investment. It's very critical at this time. And I believe that stakeholders from government to those in private sector listening to this, it will further broaden conversations and we reach a consensus to really agree on how we really grow our economy productively and inclusive for everyone. And the interesting part of this is saying we should go back to our third national development plan, even though it was in the military era, but it's still relevant what was laid out then.
You said even though it was what?
In the military government era, that's the Gowon
So military doesn't mean that it's bad.
I know, yeah. I'm just
you understand what I'm trying to say?
Definitely.
So we have to take a look at the good and the bad. But what I'm trying to say is that is where you benchmark and you reset from.
Definitely. Definitely.
Because for me, that's if it's not for that plan, even the airport you see in Lagos, here yes. You will not have it.
Yeah.
The third mainland bridge you are seeing here, they are all part of that plan. Lagos will not be what it is today without the third national development plan.
Very rich plan.
That was what was there. Everything, Ajaokuta, Eleme Petrochemical, NAFCON, fertilizer. There were 3 refineries that were built. NNPC, Pipeline and Product Marketing Company, all those things were all part of that plan. And we had the money for that. And don't forget that plan in those days, for those 5 years, was a $45 to $50 billion plan in 1975. So you can imagine that level of investment today.
We have some plans, but it's just good to have that linkage and of course build on it. But thank you once again for this conversation on how to improve foreign direct investment inflows in Nigeria, strategies for economic growth. Very rich insights shared by you. Thank you once again, Mr. Tilewa Adebajo.
Thank you.
So our viewers, I hope you enjoyed this conversation on how to improve foreign direct investment inflows into Nigeria, strategies for economic growth. Very rich insights having this conversation with Mr. Tilewa Adebajo, an economist and CEO of the CFG Advisory. If you want to get further insights on this, log on to our website displayed on the screen and follow our social media platforms. Till we come your way again, I'm Ottoabasi Abasiekong. Thank you for watching and bye for now.